Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And remember, if you're interested in any of the services I provide, make sure to check out the links in the description below for both the Patreon and Discord. Currently still in the free trial for the swing trade service in the Discord. So make sure you're in the Discord to participate in that free trial that's still going on until the end of this month. And if you are in the Discord and you're not taking advantage of that, I don't know what you're doing, because the trades have been spectacular. No losers, still on a massive winning streak, and all our winners have been pretty significant, averaging 8 to 16% per trade. Okay, now let's hop into the charts, take a look at what's going on today. So looking at the dollar, again, dollar, still having that general consolidation at the lower end of this actual blue zone. And looking at this structure, I am getting more and more confident that we are going to see a pop at least back into this fair value gap, and potentially even higher, going towards the top side of this blue zone, which is around 108, and then look for a couple stabs up higher into this fair value gap, and potentially testing out the bottom end of this structure that was lost. Now let's go into the 1 hour. Let's go into a smaller time frame just to get a better idea of what's going on. So take a look at this. So looking at the 1 hour, what do we see now? We had this high, then we had a lower high, we had this low. So in this high that we made that was low, we made a higher low from here, and we finally actually breached this swing high, made a higher high for the first time. But in my opinion, it's starting to build out a bearish structure, okay? And this makes sense if you're going to see a retracement on the daily, okay? Because ultimately, I do see the dollar coming lower from where it's at. But let's draw the trend line from this low pivot to this one right here. Okay, so just draw from there. You could pull back if you want to grab, more information, but same thing. Just pull it right there, through there, and then pull a trend line from this high swing right here to the high swing right here. Pull forward, and what do you see? You're starting to see potentially the rising wedge structure, which is bearish. Okay, that's a rising wedge structure which is bearish, and that's totally fine. So we're likely going to see price rise over time towards this fair value gap. Potentially we can break higher from this level, so we can actually invalidate the 1 hour rising wedge and go towards this fair value gap towards the top side, which again is fine. That is totally normal if we're going to come back and test on the daily the larger structure that was lost as resistance. But if we're going to have a strong continuation from where we are, watch for this structure to break, this rising wedge structure on the 1 hour. So dollar looks bearish, but we might have some short-term bullishness to look out for, okay? Now let's take a look at what's going on with the Dow and the S&P and NASDAQ. So looking at the Dow, continuing that consolidation, bullish consolidation so far. So it's looking very flaggy, isn't it? So the more time we've given this, the longer we've let this mature out, we're starting to see that our doodle here is starting to look more and more accurate. Yes, we didn't reach all the way into the fair value gap, but having that descending sort of price action that goes into a bullish structure, like a flag pattern that we're looking at here, now we're getting the idea that, okay, we broke out. We're looking for a retracement back towards this fair value gap. We've spiked into it a couple of times. We wicked into it a couple of times. Look for, once the price matures, look for this structure to validate and break up higher. And then we'll be looking for this fair value gap to get completely filled, and finally to get back above 35,000 to potentially 35,500, potentially to grab the liquidity above this level here. It's looking pretty bullish, guys, on the Dow. Next is S&P. Similar to the Dow, is pointing a little bit more down, but it's more of a consolidation than a full-on retracement, but we may see a full-on retracement shortly. Okay, so we actually have a fair value gap I haven't painted here, so we can actually get rid of this one here. This one was actually filled completely, so we'll get rid of this one. Okay, this one's been getting traded into, but we've now traded out of it, and we actually tapped this high pivot on the last daily candle here and got bought back up. But watch for this fair value gap here, this bullish fair value gap, to get filled somewhat. All right, so this is the level I'm looking to see the S&P kind of retrace into, and if we can actually hold this level and create a higher low from here, that would be extremely bullish and would imply that we're going to have a much more impulse move higher, much stronger move higher than I was thinking, because I am originally thinking that we're going to see S&P come all the way back down towards the 3700, 3650 zone, but Potentially we may not. And looking at this trend line here, so going from this low and then we attach it to this next higher low right here, this is another trend line we can keep our eye on to see, are we going to actually continue this really steep trend line up, or are we going to break down and and start consolidating at a lower level? That again, that's possible as well. But overall, we have to have a bullish bias in the short term for the S&P. All right, so next is NASDAQ. So NASDAQ consolidating on top of the trend of the descending channel. So the top trend line of the descending channel, you're watching price currently trading on top of it. It did tap into this fair value gap yesterday, or at least the last daily candle. And if we can continue to hold this level, continue to trade up above this zone, and maybe potentially come back into this fair value gap, the top side, we should be able to find enough fuel to continue higher and eventually make it towards this top green zone here. So overall, these are playing out pretty much as expected. I'm liking what I'm seeing. A lot of potential changes of character is hitting the market for a lot of different assets, and the U.S. indexes are also part of that group, where we're potentially seeing some major changes of character for the rest of this quarter on the bullish side. So next is oil. So breaking down, and again, it was kind of a 50-50, but it makes sense. It does make sense. Either direction was making sense, but losing this ascending trend line, then tapping into this bearish fair value gap, and then continuing lower makes complete sense. So now watch for oil as it takes out these lows and confirms it. Watch for it to break down further and come towards this descending trend line. So around $75 to all the way down towards like $71, $72. Okay, that's where I do see oil coming to next, but watch for this level. It's going to be, it will be very hard for this level to break. Now, it's not impossible. Of course, nothing's impossible. There are no guarantees in trading. There's only probabilities. The probabilities are that we do hold this level and we do eventually make an impulse higher, but it could take quite a long time to actually build off from this level and go up higher. Okay, so we can start trading down, oscillating around this level, and then eventually finding some upside. Or, of course, we could just spike in and wick out. That's totally possible as well. But it's more likely that we will grind lower towards that level, and then it will likely take some time before we can find the fuel to burst up higher. Because remember, there's going to be a lot of incentive to keep the oil prices as low as possible during the holiday season. But I do think that there will become a big spike in demand, especially overseas, due to lacking reserves from many countries, including the U.S. And if we get a very cold winter, which it's looking like we will, be on the lookout. Be on the lookout for oil to shoot up in price due to the lack of supply not meeting demand. All right, next let's look into gold and silver. So gold and silver. So looking at gold first, gold again having that pullback. We could still go into a consolidation, but a retracement makes complete sense here. We could retrace into any one of these three fair value gap zones and still be quite bullish. Okay, we can come all the way back down towards this descending trend line and hold, but ideally we want to watch one of these three zones, and the most attractive zone would be this top zone here, coming all the way down, filling it, holding these high pivots, and then swinging up higher. That would be the most attractive pullback. But other than that, as long as it holds these zones, we should be able to see some continuation to the upside. But I'm really liking how gold looks. It was a very impulsive move, so I am looking for somewhat of a significant retracement back to take some time, and then a continuation is very likely. All right, next is silver. So good thing we sold our position in silver right at the top side of the the microphone structure. Okay, you always want to stick to your plans. This is one of the reasons why you come up with a plan for a reason. Okay, so don't think you're gonna just pivot off your plan and think it's gonna be very successful doing so every single time. Sometimes you're right to change your plans, but most of the time you're not. This is one of those instances. It's great that we took profits off of our silver positions at the top side of this structure, because now price is far lower than where than that level, and it's likely going to come lower towards this fair value gap at the least. We could potentially see it come all the way back down towards this ascending trend line, and the risk of this ascending trend line breaking is not that far away. Okay, it could definitely break away, especially if gold has a significant retracement down. Watch your SO to come back towards this ascending trend line and potentially break it. Okay, so and if gold does retrace all the way back towards that descending trend line that it broke bullish, that does mean you might see a silver going back down towards the 18s, 17s, and potentially even lower. So it was very prudent on our side, especially if you followed me in the swing trade, to take profits where we originally planned, just so we could avoid situations like this. All right, now let's go into Bitcoin. Let's see what Bitcoin's doing today. It's been somewhat of a quiet day. It hasn't been that crazy today. So Bitcoin continuing that consolidation, looking very, very flaggish. So a bear flag sort of structure is definitely looking like it's taking shape. It's still quite early, but it is looking quite bear flaggy. Now, that doesn't mean we're done going up or even down. So we have to see, is this going to veer off towards the upside, which is definitely more likely as you're looking at a bear flag structure. You do want to see that. If you want a bear flag to form, you want to see it kind of veering up. It's most bearish when it's veering up, and it's usually around a 35-degree angle, no higher than a 45-degree angle. I get into the angles of things when I go into the tutoring, so if you're interested in that, make sure to check out the tutoring service. But yeah, angles of trend lines and how price action looks is actually quite important to measure the probabilities of something happening. Again, I won't go into major detail with that, but this is looking quite good, especially if we do start having some moves to the upside, sort of like this, okay, and it's more grindy going towards 1800. That will be a very high probability structure of a bear flag, and the probabilities of it breaking will be quite high as well. Now, we could actually see this break down, right? So it's not too late to see this actually break down and continue the trend down. That's totally in the cards, because the macro trend is the macro trend, and it will follow that eventually, unless this is the beginning of the change of character. But that's not likely right now, considering it lost this entire consolidation. So if we were to break down, you could obviously see a trend lower, or you could be seeing a larger structure being formed, potentially a descending wedge structure. And that, with the way that would work is it wouldn't be able to go too much lower than this level. Now it could go lower, but it couldn't go too much lower. The reason why is if it goes too much lower, there won't be enough of the structure just won't be healthy enough, I should say. Rather, okay, it'll be far harder if it were to start consolidating all the way down towards 14,000 and then breaking up. Then it would look most likely look more like a descending channel rather than a wedge. So flags, triangle patterns in general, timing matters so much with them. They can't take too long to actually validate. Once they take too long, they become invalidated. They just become untrue. The structure is you're not seeing the real structure. Okay, so right now it looks very good to come up a little bit higher and start grinding higher. I do see Bitcoin getting past 17,500 again, and going a bit higher, potentially all the way back towards the bottom side of this fair value gap. I do see that potentially happening, but we have to err on the side that we will break down and continue the macro trend. Okay, all right, everyone, that's it for the market recap. Remember, if you have any questions, make sure you ask me in the Discord, and if you want to join any of the services, take a look at the Patreon link in the description. If you want to look into the swing trade service, make sure if you're going to buy into it, do it after this month, because we are still in the free trial for it, and I'd rather you just use it for try it for free, and if you like it, you can buy into it next month when it goes back behind the paywall. And if you want to learn how to trade like I do, it's not that hard. Trading is hard, but learning to trade like me is not that hard, and I've proven it works over now a full year, I would say. Then make sure to check out the tutoring service, and I can definitely help you out with that. I try to be as good of a teacher as I can, and from all the people I have taught, so far so good. I haven't had really any bad experiences, and everyone seems to like the style, and they seem to get some value out of it. So if you're interested, make sure to check that out on the Patreon. All right, everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care.